Okay, good morning, good afternoon, wherever you might be. Welcome everyone. So we're going to do a Saturday live stream. We're going to go through, some subscriber stock picks, look at some various charts. Ultimately, what we're looking for is our next trade idea. Looking for the next trade idea for next week, typically. So you guys go ahead and let me know if you can hear me okay. And I'm just going to get started right off the bat. Probably go for, about 30 minutes, maybe 45 minutes today. So it's going to be a little quicker. Give me a thumbs up if you guys are new. And let me know if the audio is good. And I'll get started once I get confirmation on the audio. We had a pretty interesting week last week. Really big movements in those FANG stocks, which is kind of rare to see such large movements. And it was all earnings based, but most of the movements are taking place after hours when they reported their earnings. But we were seeing pretty big movements in the stocks. Like Amazon sold off. It was down 7% before it reported earnings. So if we flip over to Amazon, we can see here that one, sold off pretty intensely on, Thursday, and then, reported earnings and then bounced back. So the bounce was, it was up 13.5%, but, that was, if you look at the sell-off, from the point where it closed and then where it closed on Friday, it was really only up about 4.5%, 5%. So actually not that big of a move for an earnings bounce. They came out with good earnings, but obviously it was a lot bigger because of the sell-off the day before. So we'll look at that, and it says I have a feedback loop. Okay, hopefully my audio is okay, guys. I'll just move my mic a little bit farther away. All right, I'm going to get right into the charts. All right, PayPal. We'll start off with PayPal. We're going to just start going through some of these. I know someone asked me to cover net, so I'll look at that one too. All right, so here's what I'm looking at PayPal. I did take a small little long trade on it on Friday. I was looking for a bounce. We didn't really get it. I exited the position. We'll see how it. PayPal is not quite set up for a long trade, but I'm looking for it. So on PayPal, all right, here's PayPal. Let's go to the weekly chart. On the weekly chart, you've got a long-term bull trend starting back in 2016, okay? And you can see we closed the week pretty much right on that trend, right there. Okay, so we're at support on the long-term weekly trend. You can see even the intra week we kind of dipped below it and pretty much closed right on that bull trend. So I'm looking for a bounce here just because we are right on major trend line support. We also have, sorry guys, let me see if I can adjust the sound. I don't know how to fix that. I'll try to do my best there. Okay, so let me get back into it. You guys just let me know. I'll keep trying to mess with the sound as we go. It sounds like I'm having a little bit of issues, but I can't hear myself, so I'll try to adjust the gain, move the mic away or something. Let me see if that's any better. I don't know why there'd be an echo because I don't have my speakers or anything echoing back, so there's no sound coming back. But all right, so sorry about that. Back into PayPal. Just let me know if the sound gets any better as I go along. All right, so long-term bull support on PayPal. Okay, cool. And then we go into the daily here. So what I'm looking for is bullish divergence, and I'm looking for certain recoveries. On the daily, as I roll out, you can see that we have some, we have, you know, we don't really have it. It's not really bullish divergence yet because we kind of moved lower. On the RSI here, you know, slight bullish divergence. So if I zoom in on the RSI right there, you can see that we just have some bullish divergence. And that bullish divergence came with, you know, lower prices. All right, here's your earnings, the gap down, lower prices, and slightly higher momentum on the RSI. Don't quite have it there on the PPO. It's just not there. So that kind of tells me that we're going to chop around a little bit more and maybe make some slightly lower lows in price. I'm looking for those divergences to show up. If we go to the hourly chart, you know, maybe we're starting to get it, but it's just not that clean. It's just a little too early to say that we have that bullish divergence. So maybe we can get some slightly lower prices, build that divergence, and then pop up and recover this trend line right around 127. And if we get that recovery, that's going to be my buy signal. And then what I'd be looking for is a move to, at a minimum, run up and fill this gap at 155. You know, and we're about a 21% trade. Okay, so that's what I'm looking for. I think we're going to get it, but I just don't see enough in the chart as of right now to tell me to go long. And yeah, it could show up on Monday, you know, but right now I just need to see a little bit more. Okay, that's it on PayPal. Before I get into it, let's go into net. Someone asked me about this one. Okay, so net, big support here on net at 62.60. I think that's the target. I really do think we're going down there. We had we're in a bear trend, making, clear bear trend on this daily chart. Counter trend bounce right here. There was a short-term bounce. Let me look at the hourly. You can see we had a slight downtrend here on the hourly. Started to have build some bullish divergence, and that bullish divergence was really starting to show up down in here. We broke that, short-term buy signal, obviously right there. Ran up, so we could go all the way up here to 110.40, but I think we'll likely get rejected there and start to head lower. And that's what I'd be looking for. I think there's more downside. I think there's more downside in the market all across the board. So I think net's likely going to head down here to 61.50 area, and then that could be the bottom, or at least a near-term bottom where you get a more sustainable bounce. So, all right, resistance on that one is right there at about 110.79, and then we should continue to fall. All right, moving on. Baba, Baba's been really choppy, and I've kind of given up on it, at least in the short term. I was looking for a long trade on it, but it just hasn't been holding any patterns, and it's, we had a buy signal right here. It broke out, failed, came all the way back down, broke out again. It's too messy for me to find any kind of consistency. So, you have clear bullish divergence. That recent low that it made back here on the 27th was another divergent low. Clear bullish divergence. So maybe this is the real deal, and maybe we're going to break, rolling out on Baba, you've got big support / resistance right here at 129, and it's about 130. Okay, you got a gap that we had a reaction. We held support there and there. What I'd probably do is just, and it already recovered it once right here, so it looked good, but then it failed. So it was, that's why it's been tricky. I'd say to give it the benefit of the doubt, probably wait for another recovery of this 130 area. Nice big green impulsive buy signal, and just trade it that way with the stop just slightly below. That's how I'd do it. Give it a little room because it's obviously been pretty choppy. They might try to chop through this for a while, but that's probably how I'd look to trade that. And then the target would be gap fill and probably a tag from underneath of the 200-day moving average, which is heading downward. So they'll likely meet at the same time. And I can see this thing trading up into that gap, hitting the 200-day moving average from as resistance. 161.50 would be the target. And let's say we get the break and the buy signal. We're probably looking at a 22% gain on that one if we get it. The divergences are there, so you've got that going for you. So I think we're going to get it. It's just the price action's been really tricky to try to find the entry, and that's really it on that one. SQ is going to be very similar to PayPal, guys. I think SQ is going lower, and so big support on SQ right down in this area at about 83.95, 84 area. You can see resistance all through here, and then it was support right there. So several reactions on that trend line, and we're almost there. You know, we're halfway through the range. Resistance right now is about 130. Let me zoom in. Resistance on this one is about 135, and then support is that big area of support down there at 84, and we closed halfway through the range. So there's no real trade on this unless you're in the short trade. I would just stick with the short trade in my opinion, but I wouldn't be shorting this thing, and I wouldn't want to go long. If we get down here, we'll start looking for signs of bullish divergence. Probably going to undercut it and then recover, and then we'll look as a potential buy, long trade in that. So all these stocks that have really been blown out, they're going to start flipping for long trade ideas. We're going to start looking for, you know, longer trades. But I still think there's another leg down in the market, and, you know, those big cap tech stocks, and, you know, we could be starting a bear market. You know, I've made the case for that. But these things have already sold off really good. So if we're going to start a bear market in the major indices, these might go into a bear market rally. You know, we might see that next leg lower in the general markets, and maybe these come down to some of their targets, and then we get your first bear market rally, and that might be the rally that, you know, these are setting up for. All right, this one is interesting. CLX, wanted to point this one out. I saw this on Friday. I don't have a trade in it, but this is Clorox. So this is, you know, in general, a pretty defensive stock. I think they're paying a dividend. Yeah, it's a pretty defensive dividend-paying stock. This is a weekly chart going back to 2011, so pretty much the complete bull market since the Great Recession in Clorox. And again, this is just another sign that we're seeing. This is just another stock that I'm seeing break its longer-term bull market trend line. So you can see support with support, and then earnings, and this thing just had a huge sell signal on the weekly chart. Really bad earnings, I guess. And it broke its bull market trend right there. So big sell signal on Clorox on the weekly chart tells me that this one's going to start a bear market. So we got some support. You know, it's probably right around that support level. Looks like it, you know, we've got some support right in here. So probably going to get a bounce off of that pretty impulsive drop, but again, broke the longer term trend, so it's sell the rip now. Whenever you see big trends go, you look to flip over to sell the rip. Okay, guys, just scrolling through. NVIDIA. I think this one's going lower. Gut feeling on it, obviously, but the chart tells me that too. So again, this is a weekly chart, all right? So you can see as I zoom in, you got a trend line support. Here's a reaction right here. Don't have that one circled. And then when we broke, it was a big impulsive breakdown week, all right? So there's a weekly sell signal. So it's sell the rip is what I see on this. And as you zoom in, and you can see last week we traded up kind of as a back test, you know, sold down. I think we're going lower. Looking at the daily chart here, you know, you traded into resistance. You know, you got some support there's good support right in this area at about 231.20 with the 200-day right below. So, you know, you want to see that 200-day go, but I think we're likely going to probably head down, chop around as the 200-day kind of creeps up. And then we'll probably get that impulsive break one of these days. That's your next sell signal. I mean, this is on a sell signal, so, you know, you could have shorted it on the break right there. And if you did, you're profitable. And you got to give it a little room because they're probably going to chop this thing around a little bit. But I do think it's likely going to get that next sell signal, which would be that impulsive break of that support line and the 200-day. This one's got a ways to fall, so I would look at this one heading all the way down here to 127 area. You can see kind of that shelf of support. And longer term, you know, I've got this longer term, go back to the weekly to show this one. There's your bull market trend line in NVIDIA coming off 99. I think that's probably where you're heading. If we're going to go into a bear market, that's really good support, and that's your longer term bull market. This thing has been pumped way up to like extreme levels. So it might want to do this, probably bounce here, probably bounce here, and then work its way. You know, this would be like a bear market probably in the general markets, but it would still keep the bull market in this thing even to get down to here. And you know, we're looking at a drop of, you know, 90% or so. But you got to look at where this thing came from. It's been pumped, you know, massively higher. You know, I mean, from the COVID lows, it was up 600%. So these things can fall quite a ways. All right, so that's what I got on that one. I have a starter short on NVIDIA, and you know, I was adding back all my shorts last week on Thursday, you know, in the queues and stuff when we were rallying into that area that I said I thought was as high as this thing should go. I was adding in back all my shorts. So when it gapped down, or sorry, I guess that was Wednesday, but when it gapped down on Thursday, you know, that was just further confirmation that so far I've been right. So again, the bulls, and I've heard it already on a couple of YouTube channels, they see this. They see an ABC. They think we bottomed in this. They think the Q's had a big correction, and it did. For sure it did. I mean, from the highs all the way to the lows, it was down 17.5%. So that's a good size move. I just haven't seen these FANG stocks come off enough, you know, and so I don't think the correction's over until you see some of these leaders start going down to at least 10% or so, maybe more. I know they've come down, but I mean, you look at like Google, or let me get to this real quick. But again, the bulls think we bottomed here and we were doing ABC. So A, B, and they probably see maybe something like that, or even new highs, you know. And then the bears, which is where I'm at, you know, I think that we have potentially started a longer term correction. Because here's the thing. All right, we had a trend line right here going back to 2020 and lots of tags of support, and we broke that. So it does, you know, yeah, we got the correction, but I think we've actually started a downtrend. The uptrend was here. This was your uptrend. Now we have a downtrend. So I think we're doing this, all right, and we're gonna, you know, start to trend lower over time. And the reason why I don't think the correction's over is like you look at like Google. And from the highs to the lows, yeah, I guess it came off 18%. But again, here's your uptrend line in Google from 2020. Lots of reactions, clean uptrend. All we did is basically kind of drift sideways, broke a little. You know, this trend's broken though, this uptrend. So I don't think you go from pretty strong uptrend to just a little sideways dip action and then resume an uptrend. I think you likely are starting a downtrend. We had a divergent high. So the highs that this thing's making are divergent highs. And those divergent highs oftentimes get sold into, and that's exactly what happened. The gap up after earnings and just sold into the rest of the week basically. that's weakness. That's not strength, you know. The big earnings kind of keeps retail traders in, and maybe people are chasing it, but then the smart money sees that divergence and they're selling into it. Okay. Sam, Boston Beer. I charted this back in here. Your sell signal came back there. Pretty clean sell signal, back test, down she went. Earnings coming up. So you got earnings coming up. You got some support here. We're below support right now. And then probably some more support right in here. Yeah, I'll have to kind of tighten that up, but I'd say you have, it's not the cleanest level of support, but yeah, I can't quite make a complete level. It's more like a support zone, I would say. And it's kind of like right in there, basically. So some support from 346 down to about 331. That's a support zone. And resistance right there at 446 with earnings coming up. Big bullish divergence. That's there. So you got bullish divergence on both momentum indicators. So yeah, I mean, if it, let's say it kind of drifts lower into earnings, and then maybe after earnings has a big move down, it's likely going to be a big divergent low. I'd be looking for areas to buy this thing is what I would be doing. Maybe bullish earnings and it recovers. You know, earnings right now have been crazy. So we're getting massive moves on earnings. So it's higher risk and it's more gambling basically if you're taking stuff right before earnings, because this thing could plunge after earnings or it could rip higher. We don't know. So I'd rather wait till after earnings and see how this thing shapes up, and then take a play. All right, moving on. Newmont. Well, I mean, Newmont is very similar to like GLD. We need to, you know, again, big isometrical triangle on gold and GLD. And so we need to see this thing resolve. And, you know, I don't know which way it's going to resolve. We're getting close to where we should see something. And maybe it's going to chop sideways for the next month and then break right before the Fed in March. That's possible. You know, because you can see the triangle pretty much, here's March right in here. So that's when the Fed's supposed to hike rates. So we'll see what happens on that one. I'm bullish on the miners, but again, it could be wrong. You know, we'll see. I see bullish chart patterns in most of the miners. I mean, they're making like bullish falling wedges. Newmont specifically is, I mean, it's holding a bull trend, you know, back here, bullish, you know, support. That was kind of the COVID drop, nothing really there. But you could see we could do that and hit support again, still holding the bull trend, completely possible. And if it did that, that would be a drop of, you know, 12, 13%. I don't think that's going to happen, but it's completely possible. We have bullish divergence. You know, that's been building. So, gotta watch gold. Snap. Snap had big earnings, but, you know, still no real buy signal, you know. I mean, here's your downtrend in Snap. We ran down and filled the gap right here, and this thing got squirrely. You can see it gap down. I mean, it is risky out there right now. But you can see it gap down on Facebook earnings to pretty much nowhere. You know, I don't see a level right there. It just kind of gapped down, and then the next day earnings came out and it gapped up. So huge moves, shaking people off. But for me, the gap fill right here back there was a big gap, and that was kind of my initial target, and I think that was still probably the smart move because look, you hit the gap, you gap filled for a couple days, you had you bounced off of it, and then you gap down. That's kind of just unexpected, and then you gap right back up. So split the difference and just stop it. Getting out of a short trade right there, I think would have made sense because if you didn't, you probably wouldn't have gotten out right here because you're in no man's land in between a range and it's gapping down. You would feel very good about a short trade, and then the next day you'd feel very bad. So that's why I would have just stuck with that gap and said, okay, I'm out of the short trade at the gap fill. Snap though could head all the way down to here at 2087. Big support right down there. So maybe what this wants to do is, maybe we hit this and head lower. I don't see a buy signal. We haven't broken any trendline resistance. All right. Let's move on. Let's see here. What ORCL, and guys, I'm trying to get everybody's. So let's try to limit some of your picks, to just a couple. Oracle. Okay. Haven't charted this one for a while. Clean negative divergence. I see that right there on the PPO. And, you've been building negative divergence on the RSI. So divergent high, trend line. Probably comes off the COVID lows, but we'll see. Oh. Well, yeah, I don't know. You could go with something like that. COVID lows, one reaction, two reactions. That's clearly a reaction. Boom, right at, earnings, big gap up, which was a divergent high, which would have told you, okay, likely going to sell off and reverse trend. But again, what happens with people that aren't charting, they get a big positive earnings and they just feel raging, foaming at the mouth bullish. They don't get out of their trade. Why get out? Earnings were great, But that's, but the big funds use those strong earnings to unload their positions. They use that liquidity and that, that momentum to unload their positions. And once they're out, there's no volume and there's nobody else buying, and it's just retail holding the bag basically, and boom, down you go. Sell signal, downtrending. So clearly downtrending, so I would say we'd probably have lower to go. Let me see if I can find some sort of major support on this one. Yeah, it's not, you've got little individual support levels, like there's a level, 67. You probably have another level. Yeah, there's another level right in this area. 60, or that's about 75, we'll call it. Yeah. So I think we'll probably head down to that 75, 70, 74.50 area before another bounce, likely just continuing to downtrend with counter trend bounces along the way. Okay, Roku. All right, this thing's big support right there at 169, 167. There's big support there. We're under it right now. We've got bullish divergence. I like this one as a bullish trade, as a long trade. Not yet though, it's just a setup. But look what's going on. Kind of clean this up. So, you've got the big support right here. It's a clean level, lots of reactions, and that's kind of a pivot level. Looks to me like we're doing kind of stop rate action, washing out. So you can see we're just kind of making these little spikes lower, and we're building bullish divergence on the RSI on the daily chart. On the PPO, didn't quite have it. Maybe we've got it now. Let's look. We didn't quite have it, and that's why it hasn't really recovered yet. If we go to the hourly, You know, there's the hourly on the PPO, so we've got bullish divergence on the hourly. And let's check here. I'm in a thing. I'll be done in about 10 minutes. And we've got, yeah, actually, you know, we don't really have bullish divergence. We haven't made a new low yet. So maybe a little more work to do. But I think we recover this 170, and a nice strong recovery of that would be bullish. That should set us up for a move minimum 201, you know, 202 area. There's resistance, and possibly a maximum all the way up here at 294. So a minimum would be probably a move of about 18%. Maximum, that's 75%. I don't know about that one, to be honest. But if we're not going to go into a bear market and we just are going to kind of have a correction and then resume a bull trend in the major markets, then yeah, this will probably get back up to here. Okay, things to watch. I'm not long this, but I'll keep an eye on it. Yeah, Rick James, we were buying XOM way back then, but nobody wanted it. You know, I remember hearing about, you know, the president getting elected and he was going to be bearish on oil, and I don't really follow that kind of stuff. I just look at the charts, and the charts told me that this was extremely bullish. So yeah, we were buying XOM down here. That, you know, our buy signal came right there on November 5th, and you know, obviously, you know, it's been raging. I haven't stayed in XOM, but I do have other oil longs that I've been in, so it's been good. Yeah, you know, I did want to cover that TLT. I forgot to mention it in the video. So here's your bond yields, and this is why I think tech's going lower. As TLT falls, as bonds go down, the interest rates spike. And you can see we had a big spike down on Friday. Slight bullish divergence on the RSI, but it's not there on the PPO as much. So watch this. If this continues lower, if this starts to go lower, tech should make that next leg lower. It should. And you can look at, you know, the inverse of this is TNX, which is just your yields. So, you know, your 10-year yields at 193. You know, if you go back to 2018, the last time the market broke, where the Fed had to basically reverse its interest rate hikes, and reverse course was, I think in right here, yields were up around 3%. But there's way more debt now in the market, and everything's over leveraged that much more. So we probably can only handle 2%. You know, that's kind of a key level to watch. So who knows? But they're spiking. So I think and the Fed hasn't even hiked interest rates. If the market continues to sell off impulsively, it might not even allow the Fed to get one interest rate hike in, and that's going to be a really big warning sign if the Fed cannot hike rates, or they choose not to because the markets are selling off. It's, we've got bigger problems, and gold might be one of the only things that saves us in that play, because the dollar should really sink. Looking at the dollar, we've got a break of trend now in the dollar. So here's the DXY, clear uptrend line right there. We've got a sell signal Friday. They didn't recover it, so as far as I can tell, we should head lower. Support here at about 94. Let me see where I get that level. Yeah, support there at about 94.67. And that should go. You can see we already came down, hit it once, bounced, and then looks like we're going to come back down to negative divergence up here, so that was a divergent high. This is a bearish chart, and it tells me that the dollar is going lower, which tells me that gold should go higher. But we might chop around like this and then break. Excuse me. I can't, Hassan, I can't analyze Hood. There's not, it's too new of a, you know, I mean, I can look at it, but it's more speculative. Look, there on the daily chart, I don't have any history really to go off of. What I'd want to do is I'd probably look at an hourly chart for any analysis, but you could do like a downtrend like that, and then if you go to the hourly, you'll see, you know, this one is gonna, you know, there's your negative divergence that played out, or you started to build it. You've got a buy signal right here on the hourly. Actually, let me tighten that up. Make sure my downtrend line's good. Right there. And yeah, I'd probably call it right about. I like that one. So you've got a buy signal right there. Yeah, that's what I see. It's a buy signal. But it's too far away from me, you know, from the buy signal. You're 7-8% away from that. So I wouldn't want to be in this one. I wouldn't want to go long. I think the trade's already taken off because they could come down and do a back test and you'd be down 20% with the chart only doing a back test. I don't want to ride that out. I'd rather just get in right here. Upside on this, well, you've got some resistance right in here. We're barely above it, but you know, it could break back down right in here. And then it looks like you've got some former resistance right there. So that'd probably be my target if it's gonna, you know, right there. 17, call it 17. You want to step in early too. If you're long, I'd probably want to get out before it hits that, but I would say that's probably the max bounce on this thing, and then it's probably going to continue to kind of grind around and, you know, maybe make lower lows, you know, maybe just do something like that for a while. All right, Tesla. Guys, I'm going to do 2 more, and then I'm going to wrap up. All right. I already covered PayPal, so you can go back and look at that one. At least I thought I did. Yeah, I did. Okay. This one I don't think's come down enough, to be honest. But, so what did we do? From the highs to the lows, we hit the 200-day moving average. It fell 34%. We're still looking at the hourly. Yeah, kind of breaking this uptrend line, this short-term uptrend line right here. So we could run up and do a back test of this trend line right up in here, 988, 990, somewhere right in there. That's another objective area to short this thing at. So if it wants to rally, I think you short here or add, and then we do that. That trend line is here's the trend line, all right? And you can see on the daily chart all the tags of support that we had on that. There's another one. There's a you know, rejection of resistance. So again, I think accidentally clicking my mouse. So a bounce up to there should get rejected and we should head lower. So yeah, I'd be looking for lower prices, but maybe we go higher first. All right, 2 more guys and then I got to wrap up. Tesla to 50. Let's see. Well, that would be like complete bear market. Probably the end of the move, you know. But there's a big gap that's never been filled right here. This is where Tesla started its big impulsive uptrend. Remember, Tesla was kind of a mania stock that was bought up from call buying. So yeah, it could come all the way down. You know, you're going to be in a complete bear market, probably near the depths of the bear market, if that ever happens. So it's so far off and such a low probability at the levels we're at right now that I don't really, it doesn't do any good to say this is a target, but it's a possibility. I'd look at some more, you know, like this is a clean target, I think, 555 right in there. That's a nice clean target. You can see support. That's a better long-term target, at least for right now, and that's still a move of, about 40%. So I like that one. Maybe potentially down here at 189. All right, I'm going to move on from that one. Yeah, DXY is short-term bearish. I mean, I'll just go back to that. Look, if you want to look, each level has a different look. But here's the longer-term level. So here's a weekly chart on DXY. Okay, there's your uptrend line going back to 2011. All right, we broke trend right there. Oh, look, we had another reaction right there. All right, so we broke trend. That's a longer-term sell signal. So you fall, counter trend bounce. All right, there's an uptrend right there. It's, we're starting to break that trend. And we could go all the way up here, up to 99, and maybe that, I've got it kind of circled as, maybe the high of this move. But longer term, it's bearish. Shorter term, I think it's bearish, and, that's what I see. We broke this trend right there, so. All right, Qualcomm, I like to cover the ones obviously I've been talking about. Yeah, no change. We're just chopping around. I mean, if you really look at it, look what's going on. All right, little brief undercut, but back to here, back down, chopping around. The negative divergence tells me that we're going lower because, look, they had an opportunity to run with it after earnings, and they didn't. They sold into it. So there's your earnings right there. And the next day it popped. So earnings was after the bell. They popped it right all the way up here. Nothing but selling into those earnings. That's weak price action. Selling into a strong earnings. What's going to propel this thing higher if strong earnings can't? All right. And the reason why is you've got big negative divergence. So the momentum on this is gone. They use that rally of earnings to, exit positions. And I think we're going lower. So I'm staying short on this one. One more, guys, and then I'm going to wrap up. NNDM. I have no idea what that one is, but I wouldn't be all in on anything. I think that's a bad move, just from what I'm seeing right here. You've got a penny stock and you're crazy all in. It's downtrending, so if you're all in, you're obviously long. I think that's just goes without saying. It's a penny stock. Probably this right there. Resistance below the 200-day. Here's your, sorry, not my fibs. We don't need those. And you've got a downward channel, downward price channel. Support in the middle of the range. Could bounce. It's undecided. It's 50-50. Could do this. So I wouldn't take a trade here. You're not near a key level. Slight bullish divergence. Again, those are the ranges I'd watch. You're in the middle. You're downtrending. So that's all you got on that one. All right, one more, and then we're wrapping. PPL. Yeah, I'm definitely skeptical on the Fed's raising rates. We're watching that. I think they're going to at least they got to raise rates at least a quarter point in March. I think that's what they're going to do. Quarter point hike. They might spook the market with a 0.5%. Again, the Fed's not trying to crash the market. They're trying to walk the market down. So I think they want stocks to come down a little bit. They've already got a correction, but I think they want stocks to maybe come down a little bit more. So they're trying to walk the market down. That's what they're trying to do. But are they successful is the thing, because the Fed is historic at making mistakes. They basically react. So they're basically just going to probably talk hawkish until the market crashes enough, and then they'll change their tune or lighten up and try to react afterwards. So I think we got another leg lower, and then we'll probably see the Fed hike rates quarter point and then start easing off maybe. They're going to have a hard time getting rates up. I just don't think it's possible. But if the markets, I think they have to run inflation hot for the next 10 years, to be honest. And as the debt starts coming down, because they'll be collecting more taxes, inflation means that your wages go higher, but prices also go higher, which means more tax revenue. And the debt doesn't go up with inflation. The debt's kind of a fixed amount, and so you're collecting more employment taxes, you're collecting more property taxes, you're collecting higher sales tax as prices go up, and then you can pay down the debt. And as you pay down the debt, that fixed debt that's not really moving up too much, then the debt will move up though, because the interest rates are financed at the short end of the curve, but you can pay down that debt and then raise interest rates, 10 to 20 years from now, you can start to normalize. I think that's where we're at. It's kind of a resetting cycle. All right, one more, guys. When do I start considering going long? Well, there's a lot of things that tell me that this is the most expensive market ever, so I want to go long when nobody else wants to go long. That's when I want to go long. When everyone wants to go long, bigger picture stuff. Obviously, swing trades, there's always longs, there's always shorts. But bigger picture, when I want to start looking at, longs. Look, I went long on Vale, right down here. We went long Vale, Rio, we took all those trades, and those rallied, 38, 40%, all right? So, I do a lot of shorts, but there's some longs in there. That one went up, 20, 30%. But I want to go long when no one wants to go long, and I want to go short when everyone is foaming at the mouth bullish. Of course, we need to use the technicals to hone our entries, though. Yeah, inflation probably will come down a little bit, but once inflation runs, you've got wage inflation chasing it. So they just hiked the Social Security increase by 5%, which was the largest increase in over 40 years. So that means you've got everybody on Social Security now has 5% more money to chase prices. So I think inflation could come down a little bit, but I think it's still going to be higher than the interest rates, which means inflation will still be hot. Start shorting Qs. Well, Wednesday is where I shorted, but again, I also shorted right here on December or January 4th. That was my initial short entry. We caught pretty much this entire move down, exited, and I reshorted it, mostly reshorted right there. I'm pretty much fully short right now. We'll see if I'm wrong, but I reshorted it there on that move, and that's why I talked about where I think whenever I say I don't think anything should go any higher, that means it's a key level for entering a short. And so far we're profitable. So, I can stop out above here and just, break even. And I still got big profits from back here. So I think the key level was to short right there. But that's the thing. Nobody wants to short when you're rallying. Everybody wants to wait till it completely crashes and then they want to short. Everybody wanted to short down here, then it rallies. Now everybody thinks it's going higher. They don't want to short. You have to kind of watch these levels and you have to be able to take a short as you're rallying into resistance, and you got to be able to cover a short as you're falling into support. Let's look at GME, guys, and then I want to wrap. So I see no strength in this stock. And if you look at it, we've got this downtrend line. Let's see if we can mark that out. Yeah, something like that. I think. And, you know, I think we're going to continue to walk down this downtrend line in GME. So looking at the daily, you know, no bullish divergence. You know, if I zoom in here, lower lows in price, or sorry, in momentum. So, you know, again, I think we're going like this, probably pretty impulsively. Boom, down to here, 40, 45 area as our next target. So I'm still short this one, and it's profitable, and I'm just, you know, letting it do its thing. But I think we go down, and probably a lot lower. I mean, look, this thing, you know, maybe they raise some cash in this pump, but their business model hasn't changed substantially, so they should continue to drain out over time. They got earnings coming up. I don't know. We might run down to 45 before earnings, and then they'll pump it on earnings as a bet. What's probably going to happen is I think we're going to run down, hit 45. Earnings will come out. They'll pump it up to the trend line right here, and then it'll just continue lower. So it'll look bullish on the day of earnings because they'll pump it up here, but then down we go. But I'm looking to probably cover my trade down at 45 and just get out for the time being. Again, I entered the trade right up in this area. I kind of anticipated it breaking down because the market, all the momentum stocks were really breaking down, so I assumed this one was going to. So it's profitable by about 30% so far, and I think there's another good amount. I've been adding to the short as we've been falling. Another 60% downside. Okay, guys, I'm going to wrap up. Thanks for joining. If you're new, check out my stock market technical analysis course. Pretty solid course, I think. I put together all the concepts that I teach in all my videos. So check that out. And thanks for joining. Leave me a thumbs up on your way out, guys. And I'll catch you guys on Monday.